As a new trading week prepares to kick off on Wall Street, investors trying their best to figure out if the recent downturn will carry over, because last week the major averages posted their biggest weekly decline since late January. The Dow and S&P falling 4.6% and 5.1% respectively, the Nasdaq losing 5.6%. Most of the losses coming Friday when the hotter-than-expected U.S. inflation report scared investors. The Bureau of Labor Statistics reported that the U.S. Consumer Price Index rose last month by 8.6% from 1 year ago, its fastest increase since December 1981. That gain topped expectations. Also, the so-called core CPI, which gets rid of food and energy prices, coming in above estimates 6%. On top of that, preliminary June reading for the University of Michigan's Consumer Sentiment Index posted a record low of 50.2. In total, the Dow dropping 880 points, the S&P 500 losing 2.9% and 3.5% respectively on Friday alone. But now a new week awaits. Will we see a reversal of fortune, or will the slide continue amid rising inflation? Let's now take a look to see what will likely move the markets in the week ahead. Monday kicks off in the UK with British April manufacturing and industrial production figures, as well as April British GDP. GDP expected at 0.2% month-over-month for April. Tuesday sees us remain in the UK with the April British ILO unemployment rate. Expectations call for a rate of 3.8%, while in Germany May harmonized consumer prices due. Expectations call for a rate of 8.7% year-over-year. Wednesday kicks off in China with May Chinese retail sales figures. Expectations call for a rate of negative 7.3% year-over-year. And retail sales also due out of the U.S. with expectations calling for a rate of 0.2% for May. And that's not all, as out of the U.S., the Federal Reserve's interest rate decision due out, expectations calling for another rise by 50 basis points to 1.5% from 1%. Thursday's a busy session that kicks off in Australia with the Australian unemployment rate due out. May Australian unemployment expected at 3.8%. Then it's off to Switzerland with the Swiss interest rate decision, a rate that currently sits at negative 0.75%. Then in the UK, not only do we have the Bank of England's minutes, but the Bank of England's interest rate decision is also due. Expectations call for an unchanged rate of 1%. And then on Friday, the Bank of Japan's interest rate decision awaits. Expectations call for an unchanged rate of negative 0.1%. Keep in mind, inflation headlines remain in focus. In addition, earnings season may be winding down, but it's also not over. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICM.